So those guys are so large and into so many different businesses, they're not worried about being disrupted. They're taking a look at what's going on in the fintech space, and they're so big that they can buy those companies, or they can be a close second or third to the party. And they have so many relationships throughout the entire cycle that they don't feel that they're going to be disrupted. And I don't think that anybody that ever is disrupted feels like they're going to be disrupted. So who knows what's actually going to happen to them? But the best of the banks, the Goldman Sachs and the Wells Fargos and the JP Morgans, what they do really well is they move capital from the unprofitable sectors, and a lot of these things are cyclical. So they've made a ton of money in the fixed income space over the last 10 years. Today, that money is gone. They're moving that money away from fixed income into equities or back into equities. They're taking money out of the research bucket and they're putting it into, they've made a lot of money in M&A over the last year. So they're very good at capital allocation. And certainly they are either investing early on at some of these fintech companies, or they're very, very close to the venture capitalists. They bank the venture capitalists. They're very, very much in the know. And I don't expect them to be disrupted on a large scale anytime soon. There could be certain of their businesses that get disrupted, in which case they'll just move capital to another place that has higher returns, better returns. They've certainly gotten out of the lending space to a large degree because we've broken down the lines between banks and commercial banks and investment banks. And investment banking is a lot more profitable than the lending side of it. But that presents opportunities for all the fintech space. So you see all the peer-to-peer lenders actually start gaining a lot of traction, which is why there are so many different payment startups and lending startups, and some of them I think will end up being very, very, very big. What has happened, in contrast to the disruption, and we've seen it very much in Europe, and I think that we're seeing in Australia too, is that the U.S. banks have become too big to fail. We were worried about it before the financial crisis. They're only bigger now. And the European banks and the Australian banks are continuing to pull back from being global. So specifically in Europe, which I was just there a couple of weeks ago, they don't know how they're going to compete, and they continue to lose more and more market share to the big banks, and they can't sustain their global distribution platforms, which are enormously expensive. So they could be out of the capital markets business. They could be disrupted very, very much by the continuing expansion of the U.S. banks and the amount of capital that the U.S. banks have. That's what, right now, if I were an Australian bank, if I were a European bank, I'd be much more worried about the expansion of the U.S. banks than perhaps being disrupted by some of these technology firms.